What is up, guys? This is Six here from Magna Crypto and welcome back to another video. So in today's video I want to have a little look at the economy on a macro level. I want to look specifically at two indicators: the unemployment rate and also the stock market declines in relation to recessions in the past. And also I want to look at how recessions could affect crypto going forward, and what possible outcomes there could be. And before I get started with that, obviously we're going through some tough times right now, so make sure to stay protected, keep yourself safe, practice social distancing, and take care of your family. But also kind of going on from that, although obviously you got to do everything you can to stay prepared, stay safe, wear gloves and masks if you have them and things like this. But apart from that, there's no need to take it any further in terms of really panicking and looking at the news too much and really catching hold of that fear, which is not good. Because even though all this is happening, it's always important to try and look past the immediate situation. The more you're able to look at the long-term future, the better you're able to prepare for what's to come after that, because there will be a huge knock-on effect, which I'll be talking a bit about in this video. So also a little shameless plug: if you haven't already done so, please follow me on Twitter at Magna Crypto. Also on YouTube and Instagram, follow, like, subscribe. Would really appreciate that. Okay, so let's get into the video. First and foremost, let's have a little look at the crypto market and see what's going on there. Right, so I'm looking at the crypto total market cap. Now, obviously, with the rest of the market, the global market that is, crypto has taken a huge hit since mid-February time. Massive downturn followed from that point. On a weekly level, we have found support around $145 billion level, so it was a nice bounce from that. However, my outlook is bearish. I think potentially we may be able to break past resistance at 180, but I think it will be probably a short-term, if anything, a short-term bull trap, because just looking at the global market, the global economy, it's just very bearish because of some very fundamental reasons. People are losing money, they're losing their jobs. Nothing is going right at the moment. You still got the coronavirus around, so crypto is nothing special out of that. People haven't got money to invest, companies haven't got profits to invest, or investors, then it simply can't be going up. But that's my outlook on it at the moment. So now let's look at the two indicators that I was talking about. So we're going to be looking at unemployment and the stock market decline, as I said. But firstly, just the basics in terms of how to calculate unemployment. Unemployment is calculated by dividing the total number of unemployed people by the total number of employed people in the workforce. Now let's have a little look at the S&P 500, and we can have a look at the current unemployment rate and how the stock market decline and unemployment rate are interlinked. So as you can see, currently, again, since about the mid-February time, we've had a 35% decrease in the stock market value, and this is the same throughout all the different stock markets, stock exchanges. The Dow Jones, the Nasdaq, every single market you can think of has been hit hard, and that's why the unemployment rate has already started to increase. I'll show you an article that I posted on my Twitter. A record 3.3 million people have filed for claims for unemployment in the last week, and so you can see this is the average, even past the kind of 2008 crisis, which increased the unemployment rate by a significant amount, or the claims, not this technically isn't the unemployment rate, but it kind of feeds into it. Even around that period, increased by a significant amount. But if you look at just that sharp increase, it's ridiculous. And that's, just the beginning, in my opinion. And so you can see there's a link between the two, because as companies lose revenue and profits, as they fall, companies are going to make cuts. And one of the biggest part of their kind of operating costs is labor. And so, they've already started to make cuts to their labor force, and thus it's increased the number of unemployment claims, and it's going to increase the number of unemployment. However, even though this has happened and already a lot of claims have been made, a bad record, but a record nonetheless has been reached. Many economies, especially in the developed nations, have already or are going to invoke some kind of stimulus packages. And so let me show you just some of the, things the world has been, some of the stimulus packages that are being kind of thrown around. So Trump has signed a $2 trillion virus bill, the largest ever in the US. And this is to support a lot of the people. They've said that they will provide about $1,200 in stimulus payment. But also, it's to help companies stay afloat. So part of that is to help these companies who obviously have lost a lot of revenue, to give them cash so that they can continue to employ the people and to keep the economy afloat. So that's what the US have done. Also, you've got the UK, $39 billion spending package. And again, a similar thing, although they're not providing a direct cash payment to the individual, they are providing a lot of support to businesses. They're providing tax cuts. They've lowered, and this is the US as well, the US have lowered the interest rates. And so they're trying to really make sure that they don't have to make cuts to the labor force and to keep everyone employed. Canada also similarly, but this is a bit more, $75 billion coronavirus relief, they've called it. So same thing, to support businesses and to provide emergency aid and to keep the economy going and to keep the unemployment rate down essentially, or to keep the businesses going forward. Japan, same again, stimulus package, but they haven't done it yet, but they are planning to. And this stimulus package that they're kind of putting together would exceed the amount Japan spent to battle the 2009 financial crisis. So this is obviously a lot bigger than what happened before. And so you'll find loads of examples like this all around the world. Obviously, governments have to step in and do something. Otherwise, the people are going to look at these governments and be like, what are you actually doing for us? Like, you're not doing anything. And this will lead to either civil unrest, or certain parties will lose popularity, and they'll probably get, someone else will get elected in their position. So another point I'd like to make is that even though all these nations are providing stimulus packages to keep the economy afloat, basically, realistically, revenues are still going to be negatively affected. These governments are not going to cover 100% of the revenue loss that each company is suffering. So cuts, one, have been made already, and cuts will continue to be made by these companies because they are going to lose money regardless. Also, a lot of the smaller companies, a lot of the SMEs, the small kind of medium-sized businesses, might not be eligible for these bailouts. So, they're going to suffer and they might not be able to survive, or they probably won't be able to survive, this kind of economic downturn, this kind of freeze in the economy. So a lot of these companies will fail essentially, and that already will be a significant amount of kind of jobs off the market, because these companies are providing jobs for the economy, for people. So already that's a significant part that will be kind of taken off the table. And understandably, or not understandably, governments simply can't keep everyone afloat. They can't save everyone. They can't just print, well, they are printing trillions, but they can't print gazillion amount of dollars to keep every company going. You know, obviously from a human point of view, we want this coronavirus to stop because it's causing a lot of suffering, a lot of families are getting affected, a lot of people are dying, and just the whole world is in a state of fear and panic. But the longer this goes on, and it's projected that it probably will, people like, you know, scientists and experts are saying, who have created models to kind of estimate how long this will take, have estimated or gone for at least a few months up, you know, throughout the summer up until the winter time, and maybe longer. So the longer this kind of carries on, the longer we are in lockdown, and the more businesses will shut down their doors because they simply can't survive. And you know, a lot of companies these days are running on weak margins, so again, they just can't survive a month, 2 months, 3 months without any revenue. But even if this disappears tomorrow, it's already having a ripple effect on the economy, on the kind of unemployment rate, as shown in this Forbes article. So, you know, as I said, here's the analysis. For February, the unemployment rate in the US was reported as 3.5% or 5.8 million people. If you add another 3 million unemployed to that figure, then all else equal, you have approximately a 5.3% unemployment rate, which is already, you know, a significant number. So the longer this virus isn't eradicated, the bigger the long-term impact on the economy. However, it might be a bit of a slower impact than, for example, in the 08-09 crisis, because in 08-09, the governments, like the central banks, the Federal Reserve, took a long time to kind of get into action and create a stimulus package to get the economy back up and running. Whereas this time around, you know, obviously the economies, the governments have sprung into action straight away with their huge stimulus packages. So because of this, it might be a bit of a slower bleed, if anything, or it might actually turn into like a small economic uptrend followed by a more slower bleed downwards. So now that we've spoken a bit about this, let's have a little look at the charts and look at kind of the past few downturns and how that could potentially help us to look forward as to what is to come. So I've already showed you kind of the current outlook, what's happening right now. But if we have a look at the past, so what I want you to kind of see with me is how long it took for each downturn to happen, each kind of crash essentially, and how long it took for the stock market to recover. And then we're going to look at the unemployment rate and how long that takes to get back to normal. So in the dot-com bubble, from the top, it took about, so every bar is a month here, so it took 28 bars, 28 months from the top to the very bottom of that crash. So that's just over 2 years to get to the bottom. And from that bottom, it took, so 60 bars from the bottom back to where it was before. So 60 bars, I'm terrible at maths, but I believe that's about 5 years. So that took about 5 years to get back to the top. And then, because all the problems were not resolved, we had another crash. And again, we don't have to look at all the factors that caused it, but that could be for another video. But from that top, it took 20 bars, so just under 2 years to get from the top to the bottom. And it took about 48 months for it to return back to the levels it was before. So 48 months, that's 4 years. Yep, I have to think about that again. That's 4 years. So 5 years, 4 years to get back to normal, and about 2 years, give or take, for that kind of decline to happen. So now if we look at the unemployment rate and see how long it takes to get to a really high level and how long it takes to recover. So if we look at the dot-com bubble and kind of similar time as the stock market crash, it took about 37 months to get to the highest level of unemployment. So obviously, you know, the economy is going down, People are losing their jobs and companies are losing revenue, so there's less jobs available. So that took 37 months, which is about 3 years and 1 month to get to the highest level. But if you look at, how long it took to get back to normal levels, it took 74 months, which is, that is equal to about, let's say, six years. Yeah, that's just over 6 years from the kind of pre-bubble level to post-bubble level. And from the '08 crisis, it took from this point, the start of the kind of increase in unemployment, it took 128 months. So that is just over 10 years. So you see that although the stock market kind of gets back to normal a bit quicker, about 4 to 5 years on average, it took the unemployment rate about 10 years to get back to normal levels. So you see, even after the stock market recovers, there's still an ongoing ripple effect to get the economy and the companies back to kind of profitable levels where they can employ more people. Although that's happening from the top, it still takes a while to get back to what it was before. So before I kind of we look at some other things I noticed about kind of these patterns and trends, we can kind of project how we could expect this to kind of unfold going forward. As you've noticed, it takes about 37, it takes about 3. So you can see it takes about 3 years for the unemployment rate to go to the top. So same here. So it took about 3 years on each case, give or take, for the unemployment to reach the highest level and then for it to start kind of going down. So we can potentially expect the same thing to happen again if we do enter into a recession. It could be a period of about 3 years of potentially companies hemorrhaging money and therefore making cuts to their job forces, and therefore the employment rate spiking drastically. So potentially if we're heading into a recession, it could be a period of 2 to 3 years where it's just going to be very bad times and jobs are not going to be available as they were before. And potentially it could be a period of six years if it's a smaller downturn, or potentially 10 years to get back to normal levels. So it could be 2030, again, if we're entering into a recession, about 2030 till we get back to normality. But what I wanted to talk about as well is I noticed some cycles that were occurring in the past kind of half century, and how we could potentially be entering into another long-term kind of employment or economic cycle. So this might look very strange to you, but hopefully I can make this much more clearer. I do want to mention, I don't think I said this before, but this is the unemployment rate in the US. It measures, as you can tell, the percentage of unemployment, which I described earlier, which is the number of unemployed people over the number of employed people in the labor force. So you can see here that these cycles, the kind of highs and lows, tend to be averaging upwards for a period of time before they kind of average downwards. And what that basically means is that every time there's some kind of crash which spikes the unemployment rate very highly, and there's some good times, the unemployment rate never returns to what it was before, and that level seems to keep increasing over that kind of cycle. And then there's a point at which the cycle comes to an end, and the economy seems to be doing a lot better and is on the way up again. So as you can see, employment rate is decreasing massively for a period of time near the end of this kind of cycle. So you can just look at the kind of the arch and look at the higher lows that are happening and the higher highs. So this is about a, it's 68 to 53, it's about a 15-year cycle. And then the average is higher than it was before. And then again, you can see from this point, from the 70 or 69, 70, you can see there's another cycle happening again. Again, you notice there's a higher low unemployment, and this keeps going throughout these years up until the early 80s. So about, you know, a 12-year period where unemployment seems to be going higher on an average level, and even the higher highs are going much higher. So it peaks at 6%, then it peaks at 9%, and then it peaks at about 11%, and then it seems to be a kind of the end of that cycle of increased unemployment, and then seem to be entering into kind of good times. Like I'm guessing money was plentiful, there was more money available, companies doing better. It could be a new emerging market occurring at this point. So the end of the cycle seems to be a lot more better times. So there's a clear trend in these kind of employment rates. Now, obviously, there's many more factors that influence the unemployment rate, but you can just look at this charts and see kind of there is definitely a trend going on. So we just came out of essentially some good times. Again, you can see the unemployment peaks being lower. So it peaks at about 11%, and then the highest is 7 or 8%, and then it goes down to 6%. So could we be entering into another cycle of like increased unemployment on average? So because we already reached a very low level of 3%, which we didn't reach the last time we were there was the late 60s, early 70s. So could we be entering into another cycle of kind of increased unemployment? Basically, on average, bad times could be coming. Maybe we've exhausted all the kind of, we were in a period of just free money. Money was flowing everywhere, and you know, you could get a loan out whenever you wanted for very low rates. The interest rate level has been very low for a long time. So it could be the case that that's coming to an end, and now it's time to kind of go through some tough times. So it could be a case of, for example, an increase in unemployment. It's already going to be about 5-6% in the US, as you saw from that article. So it could be an increase followed by another increase, and just kind of the average being higher. That's a very bad example, but you get the point where the average, the lowest point of unemployment could start to increase, and the highest peaks could start to increase going forward. That's just something I spotted. You may just disagree with me and think it's just all a load of rubbish, but that's just my opinion. So how could this affect cryptocurrencies? Now, I mean, during economic downturns, during recessions, obviously people are losing jobs, companies are losing revenue, people are losing money. So in these kind of times, people aren't really looking to invest to make money. Well, most people, they're not really, especially not looking to invest in a quote unquote risky asset class. So on the one hand, if you look at it from that point of view, it's unlikely that crypto is going to get any love going forward for, you know, a short while at the very least. Up until this point, it's basically been a very speculative market, meaning people are just speculating whether they think this asset class is going to increase in value going forward. It hasn't really been utility. It hasn't really been kind of the technologies companies have been utilizing. It's just people thinking there's going to be a lot of gains going forward. On the other hand, it could be that utility could shine through now. So those coins that actually have a lot of utility could actually have the opportunity to shine. Utility meaning there could be huge cost-saving elements to these coins. Now, the one that comes to mind most notably is Ripple's XRP. Now, Ripple's suite of software, the on-demand liquidity, has been proven to save certain companies about 40 to 70% in their cross-border payments. So that's a lot of money. So all these companies that are losing millions could look at Ripple's suite of software and think, I could actually use this and save a lot of money because I need to save money right now. So this could be a huge opportunity for Ripple, and I'll probably make a video about this. This could be a huge opportunity for them to basically shine, to show their worth. And again, it could be a perfect situation for them and for companies to need them. So that's from another point of view, but it's only those with a lot of utility that will obviously shine. Most of the market is speculation, and if those coins especially are just luxuries, like just kind of fancy technologies, then 100% they will die and this will be the funeral. Or kind of going back to the speculative part, it could be a case of basically during the next uptrend, so you can see it's never a case of just straight up, it's always cycles. So it could be during the next uptrend when, you know, or next downtrend, sorry, in unemployment, but uptrend from a stock market point of view, from basically a short period of economic activity. It could be during these times that people might be looking to make some money again. They might be looking at a speculative market where they can make some money. So they could then look at crypto and think there's a lot of upside right here, and I'm gonna try and capitalize on that. So that could be another potential outcome for crypto. But overall, there is definitely a place for crypto in this world. It's kind of, there's a lot of utility in there that will definitely be uncovered as time goes on. We just don't know how long it will take. Could be in a couple of years, could be in a year's time, could be up to 5 years, who knows? But there's definitely utility in this market that will get uncovered in due time. So that will be all for today. I hope you got some value from that. I do love to look at the macro picture, the macro economy. It's very interesting. Although we're going through some bad times from a human point of view, there's a lot of people suffering, a lot of families suffering. It's always good to kind of look at the big picture, and so you can, better prepare yourself for what's coming. Also, I want you to make sure just stay safe, practice social distancing, take care of yourself and your family, and use this time wisely. Read books, try to upskill yourself, because whether it's next month or the next 2 years, there's definitely a recession coming. So you want to have as many skills as possible so you can become useful during these hard times. So take care of yourself and peace out.